Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this lesson, I'm going to show you how we use options to profit from swing trading, high probability setups using the Master Trader method. Everything we trade is based on our technical approach. It applies to anything that moves, any time frame, any instrument. Once we have a compelling pattern on the time frame that we're trading, we decide if we want to trade the underlying stock or ETF, or if we want to use options. When we buy options, calls or puts, we call that a directional trade. And when we sell options, we call that an income trade. In this lesson, I'm going to focus on the benefits of buying calls and puts on directional setups. Then we pick the proper strategy of the options to best match our bias of the chart setup, calculate position size, and then we simply manage the trade in between using the same technical based approach. What is an option? It's a contract. It gives you the right to buy or short something for a specific amount of time for an agreed upon price. One contract is 100 shares. When we buy call options, which I'm going to show you, we are paying money and we have the right to buy the underlying stock or ETF, and the value of this call option is going to go up in value as the underlying moves higher, as the chart suggests. Now, we're not going to get into selling options today, but we do sell options around compelling patterns also as an income trade, just calling the short-term top or bottom. We're profiting from our bullish bias with leverage and limited liability. These are the two most important benefits of buying options. You're going to see how we're profiting from the underlying at a much lower cost, and we have less potential maximum loss if the trade goes against us. I'll show you how we're going to buy in-the-money calls as a general rule for swing trading. I like 75-85 delta because that's going to give us the biggest bang for the buck and have the option more closely mimic the underlying. This is just the opposite. When we buy a put, we're paying money and we have the right to sell stock. So people do this as a speculator, which we do. So this is a directional option bearish strategy. And then people also buy puts for hedging purposes, which I'm not getting into today. Campbell soup here. This is a closed trade in our open and close spreadsheet for subscribers. And every one of our setups have the same information. We send in real time on Telegram. We give them the date, the symbol, the strategy, stock or option, are we buying or shorting options, the technical setup, and management in between. So this is our daily chart. All of our daily charts have very simple, beautiful, color-coded candlesticks and volume. We have the 20, 50, and 200 period moving average to help speed up the analysis. So this was a pullback, made a multi-week consolidation bottom at the 200 period moving average. These blue dots, the computer is marking off pivot lows, which is 3 higher lows to the left and the right. And notice, demand, which is buyers, are stepping up at this level. Now I have a wide range closing breakout. Look to the left, like all of our patterns, and it has what we call a price void, which means look to the left, and it has insignificant resistance or consolidation, which will allow for a big move up. We gave to our subscribers over the high of this day. It actually gapped up, so we entered it on the gap fill the next day. We bought the front week $50 calls in the money for $2.60 a share. So let's just eyeball this and say it was $52.50. So if you bought 100 shares of the underlying stock, that would be $5,250. If you bought one call contract, the $50 calls, that gives you the right to buy the underlying on or before Feb 24 at $50. We're only paying $260 for that call option. Here's our technical setup, breakout from a bottoming pattern at the 200 period moving average. We had such a beautiful run in one day. We sent out a telegram alert. sell half of this for $4. We made 54% return in one day. We sold the other half the following day, closed trade here in 2 days. We made over 53% return on our capital, which was $2.60 a share. So on one contract, you made $140, risking $260. If you did a 10 lot, then you made $1,400 profit. Another example on the bearish side now. We start with a technical setup. What is my compelling technical setup? This is what we call the master trader sell setup. It's in a downtrend, lower pivot highs, lower pivot lows. We have a rally and retracement at resistance and the 20-50 period moving average. Now, it was on our radar actually here, but it had earnings. And so earnings had blasted out here, and so we kind of took it off our radar. And then the very next day, it's what we call a 180 reversal. It negated this, making this a breakout failure, upside shakeout, closing breakdown. That's when we said, okay, now let's buy puts in this case, which gives us the right to sell AIG stock at the $62 strike price on or before February 24 expiration. Paid $1.60 a share, sell setup, and wide range reversal at the 2050. There's the setup. The very next day, look, we entered here, kerplunk. We sold 1/2 position, provided you have multiple contracts, at $2.55 a share. We bought at $160, 59% return in one day. We went into trail mode, 2 days later swing trade, made over 46% return on capital. So again, we're profiting from our directional bias with leverage because we're paying a fraction of what it would cost, or the buying power consumption of trading the underlying versus calls or puts, and our maximum loss is significantly lower because our maximum loss is our cost basis. It's whatever we paid for the call or put option. We have a fantastic special going on right now in our stock market trading and investing series. Now, swing trading, as I said, we have a technical based approach. So the better you are at technical analysis, the better your option trader you're going to be. That's my partner, Greg Capper's amazing course here. Whether you're new to trading or been around for decades, it is invaluable to teach you how to objectively read price action. And then our directional options course is an example of these 2 trades that we gave, buying a call, buying a put. But there's many other combinations of options that can fine tune your bias. We get into spreads and calendars and management, teach you how to pick the proper expiration, pick the proper strike price. It's an amazing course. So we have these fantastic discounts, and then here's a combo offer. Go to mastertrader.com/investing special. Hope that helped. As always, email Greg or me with any questions, and look forward to seeing you in the next trade review video.